it floods me like I'm just granite. I feel all messed up, but my feet are planted. Give me a planet, I will just go there. The earth is abandoned, I see the layers. Feeling the time when I gaze into the canyon.
Welcome to Looking at the Markets. I wanted to let you know about some opportunities I'm seeing in the financial markets, as well as some red flags, so I can warn you and help you to avoid some possible mistakes. Now remember, I am not a registered or licensed financial advisor. This is not financial advice. Do your own due diligence, make your own decisions. Anything that you do in the financial markets can lose you money, okay? So be careful. So it's getting very expensive to buy an S&P 500 contract. This is a chart that shows the hours worked to buy an S&P 500 contract, and as you can see, it's way up. Think about how many hours you have to work just to buy one contract. It shouldn't be this high. And what I like about this, it's not based just on the price of the S&P 500. This is not an S&P price chart. It is a ratio because you work hard for your money, for your cash, and when you convert that cash to stocks or to an ETF that represents the S&P 500 or whatever, you got to think about what if that S&P 500 ETF or whatever, what if it crashes, and how many hours did you work and just to watch it go up in smoke, right? So it's very high right now, S&P 500 versus U.S. average hourly earnings. So this is not what I like to buy, and I'm not saying don't buy index funds or whatever, do whatever you want, but right now if you're working and your workplace is putting your money into a 401k, 403b, whatever, that just tracks large cap, mega cap US stocks, or the S&P 500, Dow Jones, NASDAQ, whatever, you're not necessarily going to get good returns on your money over the following months or years. Maybe you will. This thing could go higher. Here's another way of looking at it: stock market performance of today's equity, that means stocks and ETFs basically, bubble versus the 1929 bubble. Yeah, you can go on Twitter, X, whatever, and find charts like this. They're not hard to find of today's stocks versus, they can superimpose it over the 2000 dot-com bubble, or in this case, the 1929 stock market bubble. And does this necessarily mean that it's going to follow 1929 and crash 86% like it did in the Great Depression 1929 crash? Not necessarily. This green line, which is today's stocks, could keep going up, of course, but I just don't like the way this looks. And so you think about Warren Buffett. Why does Berkshire Hathaway have such a huge cash position? Is that by accident? Of course not. Everything that Warren Buffett and Berkshire do are very deliberate. They know what they're doing. They research everything. And I recommend you do the same thing. You should research before you make any trades or investments. They have a huge cash position, and I've got some cash as well. So I'm not totally out of the stock market, but I'm not buying mega cap stocks like crazy because a lot of money is being spent on AI that is not necessarily bringing in the profits and revenues, at least not yet. There are a lot of expected profits and revenues, but when so much money is being spent and they're assuming all these revenues are going to come in from artificial intelligence, AI. I don't like to do a lot of assuming, and I don't like it when companies that I'm invested in are doing a whole lot of assuming and hoping, because hope is not a strategy. What about emerging markets, foreign companies outside of the United States? Well, emerging stock markets have seen 10 consecutive monthly gains, the longest streak in 21 years. This has now surpassed the 8-month run or rally seen in 2017. In other words, emerging market stocks have not seen a single month of negative returns this year, the first such occurrence since 1993. And so this is what it looks like. I'm not saying it's a bubble, but look at that chart there. And this is the consecutive months of gains for emerging market equity monthly returns. So when you just look at the price, it may not look like so much of a rally, but when you look at the consecutive monthly gains of returns in emerging markets, it looks like they're not so cheap either. So where am I looking? Well, I'm not totally out of the stock market. I'm buying stocks here and there, carefully selected ones, but I'm also looking outside. I'm looking at, quote, alternative, unquote, investments, such as Bitcoin, Ethereum, that kind of thing. Bitcoin, plunges to an extreme fear reading of 10 out of 10. That's extreme fear. The last time there was more fear was more than 3 years ago. So there it is, the Fear and Greed Index for Bitcoin, according to sentiment. This is not based on price. I'm not saying that the Bitcoin price is down to, what it was 5, 6, 7 years ago. Of course not. But it pulled back, and the sentiment. Sometimes I look at sentiment more than just the pure price action. I look at price charts too, but this is extreme fear. This is what I like to see, and I don't just go by one gauge, what one company says that where the fear is. I look at X Twitter postings or stock twits, whatever. I look at what CNBC, MSNBC, the pundits, the analysts, the strategists, the commentators, what are they saying? Are they bearish or bullish? If they're bearish, then I feel more bullish. If they're pessimistic, I tend to feel more optimistic, because that's what contrarians do. What about the gold price? This is according to Gold Silver HQ. Want to give a little bit of credit here. So November 15th, 2015, basically 10 years ago, gold was around 1100. And then in 2020, about 5 years ago, gold was around $1,900 per ounce for a huge gain. And then go 5 years later from that, very recently, 4,000 or so, $4,100 per ounce. Not too shabby for gold. So if you're holding for 5 years or more, you'll probably, no guarantees, you'll probably do okay with gold. You could say the same thing about mega cap stocks as well, sure. But I really like these returns in gold if you had just held through all the dips, the corrections, what do you want to call it? All right, whatever you want to call it. Gold Silver HQ again. Silver price per ounce. Same thing, around 10 years ago, about $14 per ounce for silver. Then 5 years ago in 2020, November, about $24. Huge jump, and then doubling today, from 2020 to today. And November 15th, 2020, remember, that was not even the low. You remember the March, April 2020 low. This was not panic time, okay? So it's still doubled anyway in 5 years. Not too bad, around $50, over $50 as of November 15th, 2025. Now, they're saying, according to Gold Silver HQ, their opinion is that the next doubling will come much faster. I'm not going to make a prediction like that. So, it's fine to be bullish on silver. That's cool. I am generally optimistic on silver for the long term and for the short term as well. But I'm not going to predict how fast the next doubling of the silver price is going to happen. Even if it comes slowly, still doubling your money more or less in 5 years, and then doubling your money more or less in 5 years again. That's incredible returns. Did the S&P 500 do that? Yeah, so ask yourself these questions. The S&P 500 has done quite well over the past 10 years, but look at silver, look at gold, and look at Bitcoin as well. And the energy sector. This is from Ottavio Costa, recommended follow on Twitter X. First gold, then copper, now watch energy. Okay, the gold miners have done quite well. I expect further gains, but I cannot make any guarantees. Copper miners, same thing. Done very well. Energy stocks, haven't seen that breakout necessarily for a number of reasons. But think about AI, think about the data center power needs for artificial intelligence applications. Think about Meta Platforms putting all this money into AI, Google Alphabet putting all this money into AI, Microsoft, and so on. Where is all this energy to power these AI programs? Where's it going to come from? Well, you need energy, of course. Alternative energy, yeah, well, also, I'm sure natural gas and oil will be needed as well. So energy stocks haven't had, they're high relative to history, but they've also been in a consolidation or sideways pattern for a number of years now, several years. And question mark here, when is the breakout going to happen? I cannot promise a breakout, but if you understand that the energy needs in nations and in continents, entire continents, look at India, look at Asia, look at the power needs, and North America as well, United States, Canada, and so on. The power needs are going to be huge for these data centers and for vehicles, so, and other things. So if you use your common sense, you can extrapolate where the next move could be. So I cannot tell you what to buy, but I can tell you what I'm looking at, and I'm certainly looking at gold, looking at silver, looking at energy, and looking at the extreme fear in Bitcoin. I like this. This is what I want to see. Bitcoin, Ethereum, not all cryptocurrencies. Many of the smaller cryptocurrencies will not do well. Some of them will go to possibly zero. Anything could go to zero, but I'm using the probabilities rather than just the possibilities. So I hope this is helpful to you. Invest accordingly. Invest according to your plan. And this is looking at the markets. I'm going to try to make more frequent videos, but we'll see. I'm writing a lot of articles. We'll see how much time I have. But thank you for watching and listening. I'll talk to you again next time.